Welcome back. Well, you are with us on Bazaar Morning Call, and it's time to talk all the individual stocks that we need to watch out for. And as usual, we have our team standing by with that list. Guys, morning. Ekta, let me start with you first. Biocon numbers are in. They look good?
Well, yes, the Biocon numbers did look good. It came out post-markets yesterday. Revenue was up around 3.8% year-on-year. Street was anticipating around a 2% growth. Margins came in better than expectations at 23.4%. And the profit was a little lower than expectations. But nonetheless, there was a lot of, this was a year where there was a licensing income, etc. So revenue and margins were something to basically focus on. Biosimilars, 59% of sales was better than expectations, according to analysts. So it was up 12% on a year-on-year basis. Generics, 18% of sales was sluggish. It was down 3% year-on-year. And that was primarily because of the API business. The company said that they are seeing a pickup in their key biosimilars such as pegfilgrastim, trastuzumab. Liraglutide approval, which is a GLP drug in UK, was an important approval for them. They said that GLP drugs will play a major growth driver FY26 onwards. Debt management continues to remain a priority. Formulations will be a key growth driver going forward. FY25 will be a year of consolidation and transitional acceleration of growth, which means they expect more opportunities to come up in the second half of FY25 and revenue will pick up then. And overall, they expect a stronger second half. Expect the stock to be in the green today on account of, good numbers in terms of margins, as well as the guidance that they have, especially on GLP-1 drugs.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go to Rima. She's here to tell us about Vodafone Idea. Morning, Rima.
Well, it's stable, decent sort of numbers. Nothing great, but not terrible also. So revenues have declined for the company by 0.6% on a quarter-on-quarter basis. And just to recap, Ben Bharti reported numbers, it was a 2% quarter-on-quarter revenue growth. Margins have improved on account of cost savings by 10 basis points. Though the loss continues in this quarter, it's at about 7,600 crore of a loss. There is a subscriber loss, so the company continues to lose subscribers, 2.2 million subscribers lost. But compared to what we've seen in the prior quarter, the subscriber loss was less. The ARPU increase is just about less than 1% actually, to 146 rupees. There is an earnings call at 2:30 p.m., so we'll be listening in closely to that. Back to you.
Okay, thanks a lot for that, Rima. Well, I'm looking at Vedanta. They've gone ahead and declared a dividend of around 11 rupees per share. That's a little bit higher, because Hindustan Zinc had paid out dividend. And out of that, if you do a calculation, then Vedanta should have paid out close to around 7 rupees 40 paise as a dividend payout from what they got from Hindustan Zinc. But at 11 rupees, it's a little bit higher. The total payout will be around 4,090 crores, out of which the promoter entity gets around 2,500 crores, which is good because that equates to around 300 million, which takes care of that $1.1 billion, repayment that they have scheduled for the remainder of this year. So the Vedanta Resources is in a good space because they get $300 million, which the market will like. They've also approved an equity raising plan of around 8,500 crores. At current market price, it equates to around 5%. We'll have to see what they do out there. And also they're talking about setting up a 125,000 copper rod plant in Saudi Arabia. So that's the third piece of news that comes out. I expect the stock to open up in the green. But moving to PB Fintech, Sudarshan joins us to tell us more. Sudarshan.
Morning, Nigel. So Newsbreak is confirmed and the company has confirmed about 2 of its directors are looking to sell up to 1.86% equity via block deals. Yashish Daya, who is chairman and CEO, is looking to sell up to 54 lakh equity shares, and Alok Bansal, who is vice chairman, whole-time director, is looking to sell up to 29.70 lakh share. So post stake sale, the stake in the company will come down to 4.5% from the current holding of 6.4%. So what will they use these proceeds for? Company says stake sale proceeds will be used for tax payment and future ESOP exercise. And the information we have through sources is offer size of the block deal is of rupees 1,053 crore and floor price is at rupees 1,258 per share, which is at a discount of 6% to Thursday's closing price. So I'm going with red for the stock.
All right, so thanks very much for that. But more names, Container Corporation and Akzo Nobel are in focus. Actually, you'll have both companies join us a little later in the program to talk about the numbers, but let's get the details in first. Mangalam has got those. Mangalam.
Well, for Container Corp, the volume data we already had for the quarter, and it turns out with the reported numbers that volumes are better than realizations. The margins have improved year on year. It's a largely mixed set where the revenues were slightly above what the street was anticipating. The margins were a mild miss. If you look at the revenues, the company reported a growth of 6.5%. The EBITDA was a growth of about 11.5%. Margins around 21.4%, and the net profit was a growth of 13.5%. What's heartening, however, is that the revenue growth was led by the EXIM segment, which is the larger contributor to their overall revenue, so up 9% out there. And the margins were led by the domestic segment, which saw a margin improvement of almost 100 basis points. The quarterly land license fee run rate also has come in at around 83 crores, which is a lot lower than what it was same time last quarter. So mild green is what I see on Container Corp. More importantly, for AkzoNobel, it was a soft set, but that's in line with the industry. If you look at it, Berger Paints reported a 3% revenue growth, AkzoNobel about 2.3%, Kansai 2%, Asian Paints was largely flat. There was some gross margin improvement, but the top line growth did not percolate all the way down, and which is why we've seen 4% sort of EBITDA growth. The net profit also grew about 13%. See some mild red on AkzoNobel.
Okay, that's AkzoNobel. And Mangalam, just run us through Concor as well.
I spoke about Container Corp. The volumes were better than realizations this time around, and we did see some bit of margin improvement. It was led by the EXIM segment, so see mild green on Container Corp.
For that, well, let's quickly move on to Endurance Tech. Sudarshan's looking at those numbers for us. Sudarshan, how do they look?
So it was an operationally strong quarter. If you talk about the numbers, profit was up 54%, revenue has increased 20%, and margin has come in at 14.5% against 12.8% against the same quarter last year. But more than numbers, what is more heartening is the outlook. Company expects total order book is expected to be boosted further as company has 1,840 crore worth requests for quotes which are under discussion with several clients. And in FY24, total orders have surged to almost 1,200 crore, which is up 28% year-on-year. And ramp-up numbers for new orders is seen rising 3 times by FY27. Currently, it's at 920 crore, and companies expecting it to increase to almost 2,700 crore. Lastly, talking about the brokerage views, of all the brokerage coverage, more than 60% have buy call on the stock, and target price is as high as 2,375, which indicates upside of 20% from current levels. So I'm going with green for Endurance Technologies.
Okay, all right. Thanks for that, Sudarshan. Well, Upasana joins us to fill us in with more earnings. So, Upasana?
First up is Crompton Greaves. The company reported an in-line set of numbers. Revenue up 9% on a YoY basis, stood at 1,961 crores versus the poll estimate of 1,942. EBITDA margin stood at 10.4% versus 11.8% on a YoY basis versus the poll estimate of 10.3%. PAT saw an uptick of 2% at 133 crores versus the poll estimate of 125. The revenue growth was led by strong growth in ECD segment, and on the lighting side, revenues were flat and margins saw a dip of almost 180 basis points. That is mainly due to continuous pricing erosion seen in B2C lighting business. Next up is Kaynes Technology. The company reported a good Q4. Healthy demand was seen across the segments. The revenue saw an uptick of 75% on a YoY basis. EBITDA margin stood at 14.9% versus 16.3%. Order book of the company stood at 4,115 crore, up almost about 9% sequentially, providing a strong visibility for growth for FY25. Well, the growth was led mainly by strong demand in industrials in EV, aerospace, electronics and railway segment. Lastly, coming to Prince Pipes, it was a weak Q4 for Prince Pipes. While the volume growth remained quite strong at 16%, revenue was down almost 3% on a YoY basis. EBITDA margin saw a dip of almost 510 basis points at 13.9%.
Upasana, thanks very much for those details. Let's get a quick check on commodities as well. Manisha is here with that. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'll start with the crude oil prices, where we are seeing it heading for a first weekly gain in 3 weeks. There are signs of global demand improving, and there is a decline in inventories in most global markets, and that has been supportive. But the profit-taking clearly is seen in the metals as a sector. I mean, we've seen all of this week see strong gains in base metals and precious metals as well. But right now, the markets really seem to be dealing with a mixed U.S. data, where the U.S. industrial production has stalled, but the initial jobless claims also have seen a decline. The trade data, in the meanwhile, has been on the stronger side. So gold and silver is off its highs from this week, and that's exactly what you are seeing in base metals also. Copper prices have slipped off on profit-taking after hitting all-time highs. There's a bit of a profit-taking that you also are seeing in iron ore. Steel prices also slightly on a weaker side in Asia right now.
All right, Manisha, thank you very much for that. That's some of the commodity headlines of the morning. Let's move on and quickly